Hello and good morning, profitable traders. Welcome back to our weekly analysis here at Value Flow Trading, and we hope you've been profitable all this while that we've been away. So, welcome you back to our general analysis, and we're going to be taking you pair after pair, models after models as we ride along. First off, we're going to be starting with the yen flow analysis. So far, since the 2nd or 1st of August 2022, the yen has been dumping. We've seen general yen weakness. Yen has been dumping across board against the major G8 currencies, and that flow has continued into the month. If we look at our higher time frames, we've been seeing the bullish structure forming clearly. Same thing on our lower time frame. Day after day, week after week, the yen has been losing strength. JPY pairs have been buying. So if you've been buying the JPY pairs cross board, then you should be in marvelous profit by now. And then fundamentally, we're seeing the cause of this JPY weakness as a result of the interest rate policy divergence between the yen and other major central banks, between the Bank of Japan and other major central banks. BOJ has pegged its interest rate at minus 0.1, and other central banks have increased theirs by between 50 and 75 basis points within the last 2 months. So that policy divergence has been the major cause of the yen weakness. So going forward, if we see the BOJ pegging its interest rate at minus 0.1, and we also anticipate other central banks and the Fed to increase their interest rate. So going forward, we're going to see continuous weakness of the yen. So this bullish rally, we don't see it ending anytime soon until we see a change in the interest rate policy. So that is our focus and that is our outlook on the yen so far. We are still bullish. We're maintaining our bullish structures on the yen. So we are looking out for more buys. Potentially the retest into last week's high. That is like an expo into what we're doing here. So if we see a retest into last week's high, then we'll be going long further on the yen. That will be all for now. Cheers and remain profitable.
Good morning, profitable traders. It's been a while. Welcome to another session with the team down to business. Mine being the commodity currency pairs. We see AUD and NZD/USD currently being bullish on the higher time frame down to the lower time frame, and this might just be because of the news that is coming out on the AUD currency this week. We're expecting the news on the NZD being the GDP quarter per quarter, and the employment change on the AUD, which are all high impact news, right? So this might be why commodity currencies are currently buying. But then again, at the same time, it might be because the USD is currently gradually changing trend to a downtrend, so dollar dump. This could also be another reason why you see the AUD/USD buying. Who knows, right? Anyways, my business for today is buying the AUD/USD and NZD/USD. I already have my levels marked up on the chart, so what I'm waiting for is them to just reverse, come back down to my pullback level, and then I'll buy commodity currency pairs for today. Thank you very much, and God bless.
Good morning, profitable traders. I am Joe. I'm going to be giving you an update or a top down on CAD JPY. So the Canadian dollar just barely inched higher against the Japanese yen this past week, but we see CAD JPY remains contained under the 107.21 to 107.64 resistance zone as price left behind a shooting star. Now the CAD JPY has been buying since the 1st of August, and there has been many pullbacks, but after a pullback we see CAD continue with its uptrend. So after a pullback on the 9th of September for a short sale, we see CAD remaining back to its buy on the 12th of September. Now, for fundamentals, we do not have any news for now that will give us more confirmation for a much more continuation of the uptrend or for a possible reversal on the CAD JPY. So, in intraday basis, we look forward for pullbacks on the CAD JPY after any major pullback. Then we continue with the uptrend. Thanks and God bless.
Good morning, profitable traders. This is Cynthia Ezike, and today on our market update, I'll be talking about the pound sterling. Coming out our chart from the higher to the lower time frame, there is no clear flow of value. Therefore, we may not be able to clearly tell the sentiments of the pound sterling. On the fundamental end, the bank holiday for the Queen's funeral could help tip UK into recession. Experts here. Thank you and God bless.
Good morning, everyone. I'm here to give you the update on the euro market today. The euro strength currently is bullish, the market is bullish, and it's because of the news that came out last week. That's the ECB index, and we've seen that the interest rates are staying at a stable rate of 1.25. So the market is currently reacting to that up to today. The market is currently bullish. All right, we're not expecting any news from the European front because there's nothing coming out against September 20th. That is the French and the German PMI. That's the next news that has a high impact that can either push the euro upwards or push it downwards. Thank you.
Good morning, profitable traders. I'm Jerry Green. And on to dollar demand today. We're seeing that dollar moving into the London session and early New York session is weak across board, and this has been clear because we've been observing that there has been a shift in the trend. However, moving forward, we could expect choppiness and a little bit of consolidation. Tomorrow's CPI and tomorrow we're expecting US CPI data. Wednesday we're expecting PPI data, and is expected to come out lower than expected, which means that the Fed that has been hiking interest rate back to back has started seeing inflation cooling down going forward. And this could offset investors' interest into the dollar moving forward. So we could see that playing out also in the bonds, as bond has been gaining front row seats moving forward. Dollar strength, it seems to be mixed, like I said. And going forward, we expect it to sell. Thank you, cheers, and God bless.